This is Alan Farley from FX Empire. United Airlines topped out in the upper 90s in the fourth quarter of 2018 after a relatively strong rally, and then fell into this narrow consolidation pattern with support in the upper 70s. It broke down violently during the pandemic decline in the first quarter, and then it tested that level again in May before shooting up above the 50-day moving average in June. Well, that rally failed, and the stock settled right along the 50-day moving average into the fourth quarter. And now we've gotten a bunch of vaccine news that's triggered a little bit of buying just right up to resistance to the 200-day moving average. Well, United today just reported that their bookings are dropping, their cancellations are rising once again due to very quickly rising pandemic numbers here in the United States and in many parts of the world. Now, it's going to be a long, dark winter for the airline industry until we get to that vaccine, and then even afterwards, there's going to be problems because business travel is going to be cut by a very substantial amount until at least the middle of the decade, because corporations really like doing business over Zoom and in the virtual meeting space, and a lot of people are going to continue to be working at home in the future, and they may not need air travel as much. So I think we really have to be careful about the sector, perhaps buying a rally above the 200-day moving average with an eye towards selling in the 50s. We have the big 2016 low that was broken, so it's very, very strong resistance. But other than that, unless you want to bottom fish with an eye on the middle of the decade, this is a very tough stock to buy.